Welcome to the BankTalk podcast, the show where we talk to leaders and experts from the community banking sector. Whether you are a current CEO or aspire to be one, this podcast will give you valuable insights and advice on how to run your financial institution better. Each episode features a different topic and a guest who shares their experience and knowledge with us. Tune in and learn something new with BankTalk podcast.
Hi, and welcome to Bank Talk. I'm Charlie Kelly, your host and partner at Remedy Consulting. Today on Bank Talk, we are talking about banking clean energy. Now, in previous episodes, we've done things on solar tax credits. We've done energy in general, an episode. And today, we're talking to a banker, Ken LaRoe, who is the CEO and co-founder of Climate First Bank. And Climate First makes their living lending into the renewable energy space. So thought we might spend some time with Ken and see if we can learn something about this side of the industry. Without further ado, then, let's get to Bank Talk. Okay, welcome back to Bank Talk. I have with me Ken LaRoe, who is the CEO and co-founder of Climate First Bank. Ken, thank you for joining me.
Thank you so much for having me.
I have a bit of a passion for this green energy space. But what fascinated me about some of what I read about the Climate First story was the fact that you seem to really focus your energies on lending into this, green energy space. But would you mind just giving us just a brief history of Climate First and give us the historical story, if you don't mind?
Absolutely. The story really began back with my first bank that I started in 1999. And it was a standard Florida startup bank, bring in a bunch of investors, start the bank, scale it, exit, and make a bunch of people a bunch of money. And the timing was just very fortuitous. And we sold in 2006 and, a great sales market and all that stuff. I stayed on for a little bit with the acquirer and then left. And my wife and I got a mini motorhome and we circumnavigated the country. And in that, before I left on that trip, my brother had given me Yvon Chouinard's autobiography. That's the fellow that started Patagonia Clothing. The name of the autobiography is Let My People Go Surfing. And I always been a passionate environmentalist. I call myself a rabid environmentalist, but I'm a rabid capitalist also. And the book was so inspirational that this guy that never intended to be a businessman, he just wanted to climb mountains and kind of reluctantly drug himself into business and just infused the business in the very DNA with a values proposition. And so I thought, well, gosh, if he can do that in the clothing industry, I can do it in the banking industry. And my best friend came up with the name First Green Bank, and my wife came up with the logo, and I started working on it. And I didn't have any idea what that meant or whatever. And it was before there was ever a movement for CSR, corporate social responsibility, or ESG, environmental, social, and governance. So I just Googled green banks, and a bank out in California, New Resource Bank, popped up, and a bank in the Netherlands, Triodos Bank. So I just called and asked for their CEO, and they both got back with me, and I said, what are you doing? What's different? And they told me what their business model was, and I thought, well, we're just going to launch. We did, and that was a real learning journey, figuring out what does it mean to be a values-based bank, and how can we really impact the world around us in a positive manner, and including exquisite benefits for our coworkers, supporting the community other than just being a member of the Rotary Club, that kind of traditional banking thing. And we thought, well, we're in the Sunshine State. There's not that much solar. What can we do to increase the amount of of solar in the state of Florida. And my dream was that people come into Florida and go, look at all that solar. What on earth, where'd that come from? And somebody say, well, there's this cool little bank, First Green Bank, that's financing it. So we developed a product, we refined. It took a couple of years to get any traction. And we did some volume. And I think by the time we sold, we had 10 or 11 million on the books. But it was the old school, take a paper application, hand it to the branch manager, a week later, get an answer, a week later, get your documents. And that just really doesn't create any volume. So fast forward, we sold the bank in 2018. The bank we sold to said they were going to continue our values proposition, and they didn't at all. In fact, I even offered to work for them for free as their chief sustainability officer, chief values officer, whatever they wanted to call me, and they wouldn't take me up on it. So my wife and I got another mini motorhome. We circumnavigated the country again, and every morning I'd get up and say, I'm going to start another bank. And then by nightfall, I'd say, too old, it's too hard, I can't do it. And after about 6 weeks, my wife, who's the most wonderful person on the planet, she's my soulmate. She's also a physician. She said, look, you're going to make a decision or we're going to turn this thing around and go home. And I'm going to divorce you because I can't stand this anymore. So the next day I said, okay, I've made a decision. I'm going to start another bank. So every morning I'd get up and tell myself I'm going to start another bank and tell her I'm going to start another bank. And by nightfall, I'd tell myself secretly, I don't know. I don't know if I can do it. But, long story, we got back. I started working on the business plan. And I built into the plan, for any of the listeners who have done a de novo, the process, and that's extremely long and protracted. And I built into every element of corporate social responsibility into the business plan. My attorney advised me, well, maybe you should take this out. Maybe you should take that out. That's going to be new to the regulators. They're not going to be comfortable. And I said, no, I want the questions up front. I don't want any question that we're not deep embedded in values. And we filed it. They approved it really without question. But one of the bedrock elements was a deep dive into renewable energy, whatever that meant. And in Florida, it's almost all solar. We have virtually no wind. So we opened June 1, 2021 in the height of COVID. So we come out of de novo June 1, a week and a half from now. And we just crossed 650 million in assets. So we're, if not the fastest growing bank in America, in the top 5, I'm sure, the fastest growing new bank. And a whole lot of it is renewable energy, which I'm super proud of. And we can get into more of the details if you'd like.
Well, first of all, I love the story. Thank you. I certainly like this circumnavigating the country with your wife and also her opinions. They sound a lot like I'm familiar with that. So in 3 years, you grew the bank by this much. Is it because of the project type? I mean, I'm a little bit fascinated by what types of projects grow a bank that quickly. And I know some of these are very large projects and that type of thing, but can you just give me a feel for what it's like to finance a project that might be a solar farm, or give me an understanding of that, and then how that helps grow the asset base?
We'll be right back.
If you're dealing with a technology vendor, consider giving Remedy Consulting a call. At Remedy, we're dedicated to helping our clients get the most out of their tech spend. If you're considering changing one of your major tech providers or are renewing a contract with a vendor, the Remedy team may be able to add some value. Our clients enjoy our deep experience working inside these major vendors, and that background helps us ask questions which eliminate headaches and expense for our clients. Sometimes that's immediate relief, in the way of your vendor invoices, and sometimes that comes in the form of contract language protection for a strategic move that you may want to make several years later. The group of experts at Remedy have years of experience in core systems, digital, mobile, payments, item capture, commercial banking, pretty much the whole gamut of technology for financial institutions. Remedy approaches the Bank Talk podcast the same way we approach our client engagements. We always try to fill some knowledge gaps, but also just have enough life experience stories to remain entertaining. So if you're renewing a technology contract or you have projects going on, just need another opinion or a project manager from outside your organization, reach out to us at remedyconsult.net. Thank you, and we appreciate you downloading the Bank Talk podcast. Now let's get back to our episode.
Yeah, so I think there's a number of factors. It's kind of hard to pin it down exactly, and we do pretty deep data dives all the time. And I tell people that the success and the growth is not in spite of the values proposition, but maybe it's because of the values proposition, and it's a bit of a combo. We have a very diverse loan portfolio, which is very unusual for Florida community banks because we just don't have a lot of C&I, as you know, and it's very real estate centric, which the regulators hate, and it can be problematic in a bad downturn. Our portfolio is only a little over 200% in the commercial real estate bucket. We have over 100 million in consumer solar, and the only reason we were able to do that is because very early on, and what happens in the solar industry space, there's no deal sourcing directly with a consumer. You can run all the ads you want till you're blue in the face, and nobody's going to come walk in the door of your bank and say, "Oh, I hear you do have a good solar product." All the deals come through the installer network. So they have sales organizations, most of them subscribe to, that are doing the outbound phone calls, set up a meeting with mom and dad at the dinner table. The sales rep sits down, says, "What's your energy consumption?" plugs it into their laptop, and, "Oh, we can save you your entire power bill if you put this much solar on the roof. It'll cost this much, and these are your financing options." And then that's where we come in. Well, unless you have a fully digitized product where that installer can just, the consumer just gets a link, they click on it, and they can do a really fast application with a really fast answer, you're not going to get the deal because the installer sales rep just wants to get it closed. Naturally, time kills deals. So our CTO came to my president and I after he had been there about 5 months and said, "I want to show you guys something." And we're on a Teams meeting, and he says, "Can I take the screen over?" Sure. He pops this thing up with a device screen like an iPad or a phone, and he walks through this demo of a loan for consumer solar. And it's like, "Marcio, where the heck did you get that?" Because as you know, with community banks, we're beholden to our core, and we're beholden to whatever API will talk to the core. And there's not a community bank CEO in the world, I think, that likes their core or any of the APIs because they're just horrid, and they don't care about their customer, the bank. So that's my soapbox for the minute. But I said, "Where'd you get this?" He said, "Well, I wrote it." So what do you mean you wrote it? I wrote the code. "You wrote the code for this product?" "Yeah." And it links with our core. It links with our loan doc prep system. It's like, oh my God, this is amazing. And so you can go on our website or the link that we send, and in 3 minutes fill out an application. In 30 seconds, you get a decision with AI. And then in the next day you get the documents. And the first month we launched that, which was May of 2022, we did $10 million in production. That's when we sold our last bank. That's what we had after almost 10 years of business. And it's just been the wild ride since then, to the point where we're over 100 million in production. We've done over 200 million in applications, and it's all automated. We've done that with 3 people.
Wow.
And then he also wrote all the proprietary code for online account opening because the stuff we got from the core was garbage, wouldn't work, was very tortured, and no consumer would ever wade through it. We've now got customers in 59 states, Puerto Rico, and the UK, deposit customers. Well, real quick, the state and the FDIC did not want us to go out of Florida on the lending side during de novo.
Okay. But you did. You were able to at some point.
On the deposit side, we are now launching nationwide our consumer solar product. We have got all the documents and the approvals and licensing in Texas, New York, North Carolina, South Carolina, Georgia. I forget. We got 9 states now that we've just launched in.
You had mentioned something that I just want to kind of pick away at just a little bit. So you had said, okay, so the installers actually technically bring you the business, and I'm assuming that when the installer brings a business, they have 3 or 4 different finance channel options. And if you have a better way to get the thing underwritten and approved, you got a better chance at the business. Did I understand that piece of that correctly?
Yes, but it's exceedingly more complex than that.
Okay.
The industry, the finance industry, I wouldn't say the installer industry is slimy, but the finance industry is slimy, and it's almost all fintechs. We had to figure this out the hard way because they require the installers to sign NDAs and that they can't divulge any of this stuff, but they'll charge a really low rate. Like back when rates were prime was 3% or whatever, they were charging 1.99% for a 20-year fixed rate solar loan. And I'm saying, well, this makes no sense. These things are all Wall Street financed things, PE or VC funded.
Mm-hmm.
There's nobody in PE world that'll sit still for 1.9%. How are they making their money? Well, I don't know. That's just what they charge. I said, no, it's not. There's got to be something else. Well, we find out they're charging up to 30% dealer fees. So they charge the dealer 30% of the total install. And the way we found this out, we invited 14 installers to come to our office and sit in a boardroom and said, okay, guys, what's going on here? How does this work? Why isn't anybody using our product? And they said, well, it's so much easier with Mosaic. It's so much easier than Sunrun. And these companies, if you look up the Minnesota Attorney General lawsuit against these companies, there's a lawsuit out there. They're going to bring them down because this is illegal. They don't disclose any of these dealer fees. So the dealer marks up the cost of the array by 30%, 40%. It's up to 50% now. So the consumers out there are dramatically overpaying for solar, and it's not being disclosed. And many of the installers hate this. They're required to not disclose it. So they quit sending deals to these places, and they started sending them to us because our intention is to break the back of those evildoers. And we don't charge a dealer fee. Ours is just the rate and a small $450 upfront fee, basically to pay for our software. That's why we're getting traction, because there are so many honest installers out there that say, I'm over this charade, and I'm going to go with
because
this
effectively the markup is going to the finance company, and the installer can't disclose that they have an agreement with the finance company, the fintech or whoever's.
Yes.
Okay, got it. So their rate is not 1.99%, is 1.99 plus 30% of the deal.
Right. So, yeah, you amortize that over a while, and it's a big chunk.
Yeah, understood. Okay. So the other question that I had, just as it relates to the consumer deals, is I would assume it would include some type of a contractor's lien on the house, or?
That's a great question. And of course, that's a question that the regulators want answered right up front. We take a UCC filing on all the equipment. So there's no lien on the house, because if you do that, then you've got all those disclosures, the TRID, all the much more complex disclosures that occurred after the meltdown, and it's just not practical, and you won't get the deal because the installers need to get it closed and get the solar on the roof. So we just take a lien on the equipment, but we will also finance a new roof, and we'll finance tree trimming.
No.
and you can't take a lien on that stuff. So there could be a chunk of it that's completely unsecured. But what we found is so far in our portfolio of $100 million, we're finding that the average life is less than 5 years because people sell the house, and a UCC filing shows up on the title search. So they either have the buyer, refinance the solar array, or it just gets included in the payoff.
So a UCC, not knowing this industry, I got to ask maybe a remedial question, but a UCC filing is similar to a contractor's lien. Not that you need the lien, you only take the lien when and if the house gets sold. Something along those lines. Am I understanding that right?
No, it's a chattel security instrument. So, for instance, if you do a C&I loan on equipment for a manufacturer, you will file a UCC and record all the serial numbers and all that junk. So,
okay, against the equipment itself.
Right. So this is kind of the similar thing. We file it, and as you may know, the UCC is a uniform. That's what it stands for, Uniform Commercial Code, and every state has adopted it, including, I think, Louisiana, even though they're on Napoleonic. They're not on English common law. They're on Napoleonic code. But I think all 50 states have it. So it's uniform. You use the same exact form in Alaska that you do in Florida.
Okay. Got it. Okay. So another semi-remedial question. So do I understand it to mean that if you're financing the equipment and the equipment and the borrower stops making a payment, is your ability the only ability you have to secure your loan by pulling the equipment off the house?
Yep.
Terrible question.
Yep.
Right. Do I understand that correctly? And
Yep. That's the main one. We also have in our contract that we can turn the power off, which means we turn off their production. They're still, tied to the grid, so they still have power, but they won't be producing their own, so their power bill is going to go way up. But the next question you might ask is, well, what happens if you have to do that? And I have to be totally transparent. I don't know. Florida's got specific replevin laws, and every state is different, from moderately different to tremendously different. We had one loan at our last bank go bad. There was a nasty divorce, that sort of thing. And so I instructed my senior credit officer to start the process of basically repossessing the solar panels. And we started down the path. And the only reason to do it was to see what was involved, because none of us had ever done it.
Oh, you never had to do
that.
Sure.
Yeah. I mean, it's pretty easy to repo a car, right?
Yeah. That's exactly what I was thinking. Yeah. It's a
but
repo
this is
guy
not
can go in and break
Yes.
the driveway, but how do you climb in the roof, right?
Yeah. So we got about halfway through the process, and then we sold the bank. So I honestly don't know what it looks like if you actually have to do it. Most likely, we would just charge it off and then go after them under the note,
Yeah, sure.
Just because it'd be too expensive, too hard. You'd have to get a court order to get on somebody's roof and all that stuff.
Yeah, but the note technically does not get recorded with the title. I guess was kind of the way I was trying to ask that question. The note for the equipment is separate from the title for the house.
Yeah, but the UCC gets recorded at the state and at the county. So
can't sell
it,
right?
It always gets picked up in the title search. And the title agency or the attorney will say, wait a minute, what's this filing against, on this solar stuff?
Yeah, I got it. Okay. So
I think they could sell it with it on there, but if the title company would write title insurance. But most of them will say, no, I'm not going to write it unless this is satisfied.
Unless you get it off. Right. Okay. Gotcha. Okay. That makes a lot of sense. Okay. So great information, extremely interesting conversation on that part. Is there another part of your portfolio that is not community solar, or I'm sorry, community solar?
Yeah. Consumers. We do. We have about 40 million in commercial solar. Okay. And it ranges everything from the guy that's got a bowling alley and just wants to reduce his energy bill to community solar. We've done community solar. We've done some small, large scale projects, but as syndications or
Oh, okay.
participations.
Right.
Yeah, I've got some of my team have become experts in it, which it's a definite specialty knowledge area, to become a subject matter expert. And there are, like I said, a few bankers in the country that are really into it. And I've got a couple of them that work. A couple of my coworkers are just experts, but there is none of that going on in Florida. So it's pretty much the Northeast or California. We did tell the regulators, well, we're going to have onesie twosies of these larger things, and they were okay with that.
Okay.
They just didn't want us wholesale going out of the state until after de novo.
But those types of projects, there aren't many of them in Florida, or they're not as financially viable in Florida as they might be in some of the other states that promote that from a state tax credit and a bunch of other ways, right?
Yeah, I only know of a couple in Florida, and they were just really creatively done. The utilities in Florida, basically own the legislature and the Public Service Commission, and so they've lobbied and have been successful in no net metering and everything else that they can do to just destroy the solar industry. So it's generally going to friendlier states that are rational and progressive, which Florida does not qualify under either of those definitions.
Okay. All right. That sounds a little familiar with what we've got going on up here in Wisconsin, honestly.
Yeah, it does kind of. Yeah.
Oh, yeah. You can. I did want to ask you about liquidity and just, your thoughts with this model around, how does liquidity work? How are you funding these projects? And, can you give me just a little feel into, is this a liquidity positive transaction or a negative? You had just mentioned something along the lines of you could take deposits in multiple places, but you at least originally were restricted to lending in a couple. Is there part of the model that helps you build the funding of this?
There is, and what we found, because we've had liquidity issues like all of my compatriots in every state, I'm sure, since the March Madness last year, and we scrambled. We did a lot of reciprocal deposit arrangements for our larger customers to get them comfortable with, not to get them FDIC insurance and all that stuff. But we also found, I think the number's almost 20% of the solar customers will open their primary checking account with us. And we've offered an inducement. We've offered a high rate on interest-bearing checking, and we've had a very strong uptake. So we are getting liquidity funding, but the main source of liquidity has just been burning up shoe leather.
Just like everybody. Yep.
Everybody bringing in middle market companies, all that stuff.
Okay.
And some of the community projects have some deposits that go with them, but they're not self-funding.
Right. Yeah, and I think that was the exact question. I didn't know if there was a requirement to hold a deposit as part of the project, and based on what you said originally, which is, hey, this is installer run, right? The installer wants to get the project going. It's probably hard to make that a requirement, but an inducement to open up, your checking account with a direct deposit is, you got them in front of you, right?
We got it in front of us. Yeah. It's an opportunity.
Yeah, absolutely.
And then the installers, I mean, there's some installers that are just really cranking businesses doing $200 million a year in revenue. I mean, these are some pretty sizable middle market companies. And so we're right in front of them too. We haven't had the success of landing a lot of their business. Yeah, but we're getting there. And then, I don't know, we've developed some really good accounts also that are no cost treasury services and stuff that appeal to these these, middle market companies.
Yeah.
So we're pretty excited about that too.
Excellent. So one last question on these smaller solar projects. Is there typically, I would assume, would be a down payment required, right? These aren't 100% financed. How do you think about that?
Well, you're going to be shocked to hear this, but they are 100% financed.
100% finance. Okay.
Yep, we finance 100% fixed rate for 30 years.
Okay.
So it's an absolutely nutty bank product that the regulators would have every right to say, this is the craziest thing I've ever heard. We don't want you doing it. But I think they took the approach that they'd cautiously watch us, and the metrics are amazing. I mean, we have no delinquencies, no losses. They're fairly short term life, even though it's a 30-year loan.
Because they're refinanced, or just the natural
because they're
way
refinanced, right?
House rolls in or what have you. And I would assume you must require a direct deposit or some way to make those collections easier as part of the whole gig.
We don't require it. We offer a lower rate if they do it.
Okay. Gotcha.
Which is really advantageous to the consumer. I mean, it's of course exceedingly advantageous to us. It's worth the discount. I don't remember the discount. Otherwise, I'd gladly share it. But I just
no.
I don't remember.
The fact that you need one is interesting.
Yeah.
And obviously, like you said, it's advantageous because you sure don't want to be chasing people around.
No, not on the average deal. Also, is about $40,000.
Okay.
You'd think it'd be less, but we get some that are 20, but we also get some that are 100, 150, 200 for a large house that also needs a roof.
Oh, yeah, I see that. Makes sense. I'm assuming in order to put the solar in, you're going to tear the roof up, whether you want to or not, right? It's not with a shingle roof or a clay roof or what have you, whatever.
Shingles are shingles. Yeah, the clay is a problem, but the main thing is if the roof's got much age on it, you don't want to put the panels on because the roof's going to go bad at some point. Then you got to pull all the panels off to re-roof it. So
sure, yeah, the panels outlive the roof, huh?
Yeah, if the roof is over 15 years old, you want to put a new roof on before you put solar.
Yeah, gotcha. Well, Ken, is there anything else you want to share before we wrap this up?
Well, the main thing is I would just encourage all the community bankers out there to embrace a values proposition because it brings in so many customers. And that's part of our liquidity funding is that we have people seeking us out. That they literally will email and say, I'm moving my money. I'm sick of Bank of America or Wells or whatever, and you guys are making a difference in the world, and I want to put my money where I know it's doing some good.
Oh, that's great. There's a benefit you never thought was coming, I bet you. Or maybe you did.
Not to the level we have, because I think we're as good as we can measure it. We're 35% of our deposits are here just because of our values proposition.
Wow. That's excellent. Well, Ken, thank you very much for joining us today on Bank Talk. Really appreciate the input. It's been, I think you nailed it. You hit it right on the head. It's been great.
Well, thank you so much. Sure.
Okay, so that's it for Bank Talk. Thank you for listening today. Have a good day and keep on learning.
Thank you for listening to the Bank Talk podcast brought to you by Remedy Consulting. To reach out to Ken, you can go out to his LinkedIn page or check out climatefirstbank.com. Once again, climatefirstbank.com. If you like what you hear, please rate, review, and share our work with your colleagues. Thanks again, and we'll see you in the next episode.